16th edition of FE India's Best Banks Awards, celebrating excellence, best practices, and outstanding achievements by India's top financial institutions. Before we proceed any further, we'd like to thank our partners, our presenting partner, IRB Infrastructure Developers Limited, our corporate partner, World Trade Center, AI partner, Hexo AI, our associate partners, Runwal Realty, Starkey India, India Infrastructure Finance Company Limited, Nyati Group, Joy E-Bike, Finstack, Aditya Birla Capital, and Navneet Motors, and of course our knowledge partner, Ernst & Young Global Limited. Ladies and gentlemen, today's event is live on financialexpress.com and on the social media handles of Financial Express. You can post about the ceremony with the hashtag FEBestBanks. So let's begin with a quick glimpse about the ceremony.
The FE Best Banks Awards have always honored the country's best lending institutions. The winners across categories such as banks, non-banking financial companies, small finance banks and fintechs are all selected by an independent jury. The jury is supported by information collated and checked by EY, which is based on 3 years of Reserve Bank of India data. In addition to financial metrics, other parameters such as corporate governance are also taken into consideration. Apart from awards for the leaders in various sectors, the jury also selects the country's best digital lenders and the best banking products. FE India's Best Banks Awards.
First and foremost, ladies and gentlemen, it's my absolute pleasure to request Mr. Anant Goenka, Executive Director, the Indian Express Group, to join us on stage.
Ladies and gentlemen, very warm welcome. On behalf of my father, our chairman, Vivek Goenka, very warm welcome to all of you. It's my absolute privilege and honor to welcome our chief guest, Sri Nirmala ji, our finance minister, to the Financial Express Best Bank Awards. And on a very special day today, I think for anyone in the cabinet, not only is the BJP set to start a historic third term in Haryana, but we've also just seen a remarkably significant election get completed peacefully in Jammu and Kashmir. I think both Haryana and J&K elections, Nirmala ji, congratulations to you. Ladies and gentlemen, I think, in no small part, we are sitting today at the center of the world's attention because of the work of our finance minister. She has played an incredible leader, both peacetime and wartime leader. We came out of the pandemic hitting 3 sixes, 6% inflation, 6% GDP growth, 6% interest rates. And last year our GDP grew at 8%. We're projecting 7.2% on this high growth base rate this year, and inflation's at 5.1%. Markets, at least until last week, were at all-time highs. She has pushed private sector on both productivity and on investment. PLI has given us a good foundation to benefit from China +1. She has given the confidence to the banking sector to support India's recovery after COVID. Has thought creatively about bypassing the dollar wherever it's been in our strategic interest. She's pushed the economics, but also the politics. She's given her party enormous air cover and even done infantry work. We've all seen her campaigning on ground. I think the last time she was here at Best Banks, she had just come back from a long trip through the Northeast. So she's done both the 30,000 feet and the on ground. So I think it's safe to say that no time in the last 15 years has the corporate Indian balance sheets looked as good as they do today. And certainly no time in the last 15 years has the banking sector looked as good as it looks today. The NPAs have been cleaned up, we've got heaps of cash, so everything is looking great. And yet, obviously, challenges persist, and there are leaders because there are challenges. The Financial Express did a very interesting analysis. It looked at one of the largest conglomerates in India. It took 23 of its largest publicly listed companies, and it analyzed that revenue grew by 11%, profit grew by 35%, and these 23 companies together, their valuation grew by 45%. So this is one conglomerate. I won't say the name, but I will let you all try to guess it. Revenue grown by 11%, profit by 35%, valuation by 45%, yet that company has hired 45 people less than it did last year. So in spite of this tremendous growth in 1 year, the number of people being hired is less. So jobs is going to be, I think, a challenge, and this trend, according to this FE analysis, is similar in most corporates, in many corporates that we've seen across India. So I think this is a problem that's going to take equal parts economics and politics to solve. Either way, I don't think there's a better person for the job than the finance minister. And I feel the best banks is almost incomplete without Nirmala ji. It's incomplete not only because she holds a record for the maximum number of budgets delivered consecutively in India, but I think because the special partnership that Nirmala ji has created with this room, with the banking community, through COVID to get India out of the crisis that we faced, I think it will go down in the history books as something very special. Since Nirmala ji is an accomplished academic and an MPhil from JNU, if you indulge me, Nirmala ji, I'm going to end with a short history factoid I picked up recently from a podcast. I learned about the etymology of the word private. I don't know how many of you all know this story, but so the word private actually comes from the early 16th century, when Queen Elizabeth was failing to challenge Spain's domination of the sea routes, global sea routes. So what England decided to do was to sanction pirates, right? Pirates who would like attack and rob ships. England decided to sanction pirates to go and attack the enemy ships, and that's where the word privateers came from. I thought it was an interesting factoid to trace the first time government and private enterprise entered into a partnership. And the word privateering came from there. And I think it's interesting if you compare that partnership to the partnership that's happened with the finance minister's office and this government and the banking sector during COVID. Because obviously the partnership is equally intimate, equally exciting, equally historical. The motives, of course, are far more honorable, profound, and good. So for all these reasons, I think there cannot be a better chief guest to have with us than the finance minister. I will not stand between you and her much longer. Nirmala ji, a very, very warm welcome. Thank you for being here. Can I please invite you to join us on stage? Please invite you to join us on stage and give us a short welcome note.
Good evening, and thank you for having me here today, Financial Express. Since the introduction was more for me as a finance minister and the tenure that has been so much described in Anand's statement, there are a few things that I would want to speak about. I know there's going to be a question-answer session afterwards, but I think it's the best occasion for me to draw your attention on how the Indian economy has had this 10 long years where the challenges of the initial years and the position that we are in today may be different, but they are not by accident. They are due to the kind of efforts that have been taken and the kind of reception and absorption by the people, the stakeholders, in every one of the policies that the government has taken. So I will certainly elaborate on some of them, and it might be just appropriate for me to say it here because it is something which you have done, we have done together, and that's why India is where it is today. It's certainly an honor for me to be here to talk about banks, and with the jury having identified the best banks, it's just the right thing for me to be here and see what's going on. But Indian banks and their turnaround story is not just for us to celebrate today, but it is going to make a lot of academic interest come in the form of further writing up on how this was managed. And the significant turnaround that the Indian banking sector has achieved is actually the best thing to happen, not just for everybody, but in this function I can say the jury therefore would have had exciting time to see how the turnaround has happened, and therefore who are the ones who stood out even in this exercise of turnaround. So Indian banks have always played a very crucial role in India's economic development, but all the more now and all the more from now hereafter. So the attempt has to be to balance the government's priority sector lending, but yet talk about sustainable growth and India's aspirations. The common people's aspirations are such that we need to have newer growth level achieved, and therefore the levers are in the hands of the banks. RBI's financial stability report, which came out late June 2024, that the Indian banks and the Indian economy are remaining robust. Banking sector's health, scheduled commercial banks' gross NPA ratio fell to a multi-year low of 2.8%. The net NPA ratio is 0.6%. Are these numbers which we would have believed had we speculated in 2014 that it is possible? Absolutely not. The NPA and the net or gross was all so heated up, and it was just not imaginable that across the board all the banks would benefit from the reforms undertaken and that their net NPA ratio would come down so much. The capital adequacy ratio for the scheduled commercial bank, capital to risk weighted assets ratio, that is the CRAR, at 16.8%, common equity tier 1 ratio is 13.9%. So the healthy financial system is the one which can finance growth opportunities. Look at the figures for non-food credit. It grew by 15% for 23 and 24 and has sustained that expansion as of July 24 as well. Credit to industry, driven by steady demand from industrial MSMEs and a pickup in the credit appetite of the large companies, has also grown faster during the last 8 months. Listen to this. This was a surprise for me. So that has grown faster in the last 8 months, that is January to July 24, than the 5-year than the 5-year CAGR from 1920 to 23-24. In other words, the reform, the coming out of the woods by the banks, has resulted in speedier credit growth, and that can be seen in the last 8 months compared to the 5 years before it. So today I can safely say Although India has always attempted to take banking to all the people of the country, I can safely say that every Indian is intimately linked and connected to the banking system now like never before. Whether it is the JAM Trinity which has brought that miracle, or whether the UPI which has brought that miracle on board, or the ONDC, the open network for commerce which can be used by people, account aggregators who manage to give small ticket loans, and the Digi Locker, which is something which we thought earlier it will be only used by high net worth individual, but now it's available for everybody and people are familiar with it. So the inclusive, seamless banking service is happening because of all this. So the new digital economy has actually leveraged it in such a way that billion bank accounts, billion mobile phones, and a billion digital identities is what is India today. So with this and with the kind of advantage that technology has given us, we are able to move fast to reach the aspirational classes of people so that growth and development and its benefits can be truly democratized. So due to favorable policies and the regulatory support which has been given by the government, things are moving faster than people expected or speculated on. A lot of political capital has been spent by Honorable Prime Minister himself in that for pushing the digital, for taking up schemes which will make people to become savvy in using the digital infrastructure which was spreading. I think that political capital being invested is actually seeing common people benefit from all the schemes, benefit from the traction that the global situation has in turn given to the Indian economy, and as a result we are able to take the developmental story faster, much before the world is able to assess it. So not just recovery, but simultaneously working for affordable and formal financial sector reforms, and that is what is giving us the leap forward. So 53 crore people have opened their accounts under the PM Jan Dhan zero balance accounts with minimal documentation, and that actually has taken a lot of advantage in the sense the Bima Yojanas could be given to them with minimum premium, whether it is for accident cover or for life. This actually has changed the landscape of common people feeling that there is something happening about them for them to be financially more empowered. Exponential growth in the digital banking area has made has been made affordable because you have mobile data, which is the cheapest in India compared to anywhere else. When data becomes cheap and common people are able to use it in their feature phones, not just smartphones, there is no reason why common people wouldn't want to benefit from it. And purely because of that, much against the speculation of very many people who suspected that digital India will never take on, today you find digital India literally in every corner of the country. I've had this experience once when I went into the streets to buy something on the street just for the fancy of it, because I thought, oh, it looked fresh and green, I should take it back home to Delhi. QR code was very clearly, visibly displayed. Small merchants prefer it because they don't have to search in their drawers for giving cash which is left behind or coins to spare. And therefore, the simplicity and the ease of doing business at that level has mattered. So every facet of the banking system is now available on the phone and people know it. They get their messages about their credit into their account. They get messages about what is expected to be paid for small premiums. So that has really actually helped the system itself and the country as a whole. UPI today, I was just exchanging some thoughts with some of the visitors here. 50 crores have been achieved as of September 2024. Would we imagine in this country that kind of a rapidity with which digitization will be accepted by the people, but that's what has brought in the change. The digital KYC, the Know Your Customer, is also something which I thought is worth recalling, and that's made life easy. There are, of course, complications still which we need to address, but on the whole, today you do not physically have to present yourself to a bank. Today, I was even pleasantly surprised that very many banks do have a video KYC, that an elderly citizen wanting to prove that he's alive so that he can get his pension continuously doesn't have to go to the bank. He can sit at home and have a video conversation with the branch manager, and his work is done. And that is the kind of acceptability of digital applications which has gone into our banking system, and that is what is helping. There was also this concern most often expressed to me about savings at the cost of growing investment. Is that right? So I would want to just give one thought here. Digital investment platforms have actually done a great service for India. It has made middle class see where it is possible to invest, either through the mutual funds or opening a direct demat account and working, or stocks or bonds. As a result, post-COVID, you have many Indians willing to take that risk and enter into the market rather than comfortably sit in low interest paying deposit accounts. So I'm not suggesting that this is better or that is better. It is up to the individual to take a call where he wants to put his money, and as much information on all of them should be made available for our citizens. The number of demat accounts, I'm never tired of saying this, the number of demat accounts surged to 17.1 crores in September 2024 compared to 2.31 crores sometime in 2014. So that kind of a 7 times increase in 10 years is a remarkable change in the way in which people are looking at how to deploy their funds and earn more. Unique mutual fund investors has also grown. It was somewhere in the range of 1 crore in 2014. Today it is 4 crores, again 4 times increase in the last 10 years. The number of mutual fund investor folios has also gone up from 8.38 crore folios as of 30th June 2019 to 19.10 crores as of 30th June 2024. So this kind of change is not insignificant. We need to note it, and we need to ready the economy to be able to give space for these kind of people's own decision making a big difference to our markets. The Indian mutual funds asset under management has doubled to 66 lakh crores from 25.48 lakh crores in 2019. So the post-COVID move is across the board. It's not just going to one activity in the market, it's across the board. In a span of 5 years, the asset under management has actually increased 2.5 times for the mutual funds. So access to credit equally has also become easier. Credit availability through priority sector lending, whether it is the PM Mudra scheme, stand-up scheme or Swanidhi, has made it possible for collateral-free seeking of loans from the bank. And that has enabled a lot of small traders to believe that they can carry on without the middlemen who otherwise were very, very difficult to handle. But today the banks, because of the sovereign support which has come in, the backing which has come in, have lent to small businesses. Consent-based aggregators, that framework has facilitated 42 lakh loans amounting to 42,300 crores till March 2024. When we launched it in about 3 years ago, there were only few people who came about. Today, the cumulative average ticket size of loans facilitated by the account aggregators is pegged at 1 lakh on an average. So account aggregator ecosystem has 163 financial information providers and about 475 financial information users of that information which is being provided. 2.12 billion financial accounts, including 1.64 billion bank accounts, are all in the account aggregator regime. You can just imagine the rapidity with which people are benefiting from these instruments which we bring in the financial world because of India's lead advantage in fintech. Responsible use of credit cards are also making a big difference. Today, 2 crore credit cards which were in 2014 have gone to 10 crore credit cards issued, and this is cumulative figure, not unique card holders. So there's rapid change in the way in which India's fintech has made many things possible. I repeat, the full credit for financial transformation goes to the people of India. So the way forward is something on which I'll spend a minute. The health of the banks actually determine the health of the economy and the financial health of households. Sustaining the longevity of banking and financial institutions is both from the user side and also from the policy side. Over-lending, meaning the risk is insolvency. Under-lending affects profits and economic growth, are a problem. Banks will have to be carefully balancing between the two, and the right prudence in lending to create profits while keeping yourself away from risks is what creates the best banks. And that's what you've selected today. To those banks, I certainly have a few words. Cybersecurity risks are got to be planned. We need to be staying ahead of the curve on it. Use futuristic technologies, whether it's AI, big data, cloud computing, machine learning, very required for the customers for providing personalized accounts. For financial institutions to use as tools for mitigating risks and also fraud managements. And for the regulators to use them as oversight mechanism and real-time monitoring capabilities of the regulators can be improved by adopting the technology. And there will be huge demand for cybersecurity professionals, which banks will have to make sure that they are not going to be stingy about recruiting them. They are going to be your firewalls, literally, physically, because otherwise the digital firewall will be ineffective. And I take this opportunity, and I'm sorry for those who are waiting to get the awards, I take this opportunity, a moment, to invite banks and also institutions which are closely working with the banks to offer their participation in the PM internship program that we have launched. And from the 12th, the young people of the country will be allowed to use the portal to register and seek positions for 12 months of skilling on the shop floor itself or on the desks, at the desks of these companies. It will help in creating a greater awareness about what is required for jobs. These are internships, they are not jobs. But by this internship, we honestly believe the youth of India will be able to get a picture of what is expected of them. Most of them well-qualified engineers still suffer from lacking that set of skills which they need to be employed. And therefore, I invite all of you all to participate in this PM Skill internship program, which will give us, our youth, the advantage. Other than that, of course, the fintech industry is contributing much more rapidly than what we can imagine. I continue to support them. We certainly need them to do everything that it takes to make India a lot more tech savvy, particularly for our financial sector, which will be the key driver towards Vikasit Bharat. So in conclusion, I would only say I celebrate the excellence that you're awarding today, and all the participants would be keen to know who the winners are, but the winners are going to be the champions for us for the next 25 years so that all of us can see a developed India, so that the future generations can be proud about the work that all of us have done together. Thank you very much.
Thank you very much for those inspiring words. I request our Honorable Chief Guest to kindly take a seat as we enjoy the prestigious FE India's Best Banks Awards presentation for the year 2022-2023. All right. So the winners have been selected on the basis of the analysis done by Ernst & Young and deliberations by our distinguished jury members who are industry experts and leaders of the financial industry and policy making. So let's take a look at our jury AV.
Sharad Sharma, founder ISpirt.
It is my absolute pleasure to invite our chief guest, Honorable Union Minister Nirmala Sitharaman, back onto the stage along with Mr. Amit Chandra, Executive Director, the Indian Express Group, to begin the awards presentation. Let me also invite Mr. Viren Mehta, partner at a member firm of EY Global Limited, joining us on stage as we begin the awards presentation this evening. All right, let's take a look. The very first category is FinTech payments.
The winner is Bain Labs.
May I request Mr. Kush Mehra, President and CBO Bain Labs, to please join us on stage. Congratulations. Thank you very much, Mr. Mehra, and thank you, Mr. Mehta, for joining us this evening. I would now like to invite Mr. Akhil Chauhan, Managing Director, Starkey India, to please join us for the next category coming up, which is FinTech lending. Let's take a look.
The winner is YouGrow Capital.
Congratulations, Mr. Shachindra Nath, founder YouGrow Capital. Let's have him on stage joining us to receive this award. And thank you to Mr. Nath. And thank you to Mr. Chauhan for joining us as well. I would now like to invite Mr. Yatin Gupte, the Chairman and Managing Director, Ward Wizard Innovations and Mobility Limited, to join us as we move into the next category, which is FinTech investment.
The winner is Small Case.
Congratulations, Mr. small case. He's joining us as we speak to collect the award this evening. Congratulations. Thank you very much, Mr. Kamath, and thank you to Mr. Gupte as well for joining us. I would like to request Mr. Harish Shroff, the Director, Sales, Marketing and Business Development, Nyati Group, to please join us. Up next, ladies and gentlemen, we have FinTech Insurance.
The winner is Bajaj Finserv Health.
Many congratulations, Mr. Devang Modi, the Chief Executive Officer, Bajaj Finserv Health, is joining us to accept the award. Congratulations. Thank you to Mr. Modi and thank you to Mr. Shroff as well. Let me invite Mr. Gaurav Agarwal, the founder FinStack, to please join us as we move on to the next category of our awards this evening, which is Digital Bank.
The winner is State Bank of India.
Challa S. Sethi, the Chairman, State Bank of India, and Mr. Nitin Chugh, Deputy Managing Director and Head of Digital Banking, State Bank of India, to kindly join us on the stage to receive the award this evening. Congratulations, gentlemen. And thank you, Mr. Agarwal, for joining us on the stage as well. I would like to invite Mr. Kunal Bhatia, the founder, Hexo AI, to please join us for the next category of awards this evening. And that next category is Digital Bank Private. Let's take a look.
The winner is Axis Bank.
Congratulations. We have Mr. Samir Shetty, the Head Digital Business and Transformation, Axis Bank, on stage with us, collecting the award. Many congratulations. Thank you, Mr. Shetty, and thank you to Mr. Bhatia as well. Let me tell you about the next award category, ladies and gentlemen. We are talking about savings product.
The winner is IDFC First Bank.
Let me invite Mr. Chinmay Doble, the Head Retail Liabilities and Branch Banking, IDFC First Bank, to collect and receive the award this evening. Many congratulations, Mr. Doble, and thank you. I would now like to invite Dr. Vijay Kalantri, the Chairman, MVI RDC World Trade Center, Mumbai, to join us on the stage as we move into the next category. And that category, ladies and gentlemen, is a non-banking financial company. Can we reveal the winner?
The winner is Aptus Value Housing Finance.
Ladies and gentlemen, put those hands together as we invite Mr. P. Balaji, Managing Director, Aptus Value Housing Finance, to join us on stage and receive this award. Many congratulations, Mr. Balaji, and a big thank you to Dr. Kalantri as well for joining us. Let me now invite Mr. Sharad Kachalia, the Director, Navneet Motors, to please join us on the stage. The next award, ladies and gentlemen, is in the category of Small Finance Bank.
The winner is Equitas Small Finance Bank.
Please put your hands together as I request Mr. Rohit Fatke, Senior President and Business Head, Assets, Equitas Small Finance Bank, to join us on the stage this evening and receive the award. Congratulations once again. Thank you, Mr. Fatke, and thank you, Mr. Kachalia, for joining us this evening. I would now like to invite Mr. Subhash Runwal, Chairman of Runwal Realty, to please join us. Up next, ladies and gentlemen, we have Foreign Bank.
The winner is Mizuho Bank.
Many congratulations. We have Mr. Piyush Agarwal, Senior MD, Head Corporate and Institutional Banking India, and Mr. Tatsuhiro Otake, India CEO, Mizuho Bank, receiving the award as we speak. Congratulations, gentlemen, and thank you very much. Thank you to Mr. Runwal as well. I would now like to request Dr. Satinder Singh Rana, CEO Corporate, IRB Infrastructure Developers Limited, to please join us as we are presenting the next set of awards. And up next, ladies and gentlemen, the category of Private Sector Bank.
The winner is ICICI Bank.
Many congratulations. May I request Mr. Sandeep Batra, Executive Director, ICICI Bank, to join us on stage. Congratulations and thank you, Mr. Batra. And now, I would like Mr. Shamal Majumdar, Editor, Financial Express, to please join us on stage for the next set of awards. Ladies and gentlemen, we are now moving into the individual awards segment, which honors individuals who have set high standards and made significant contributions to the organization and the banking sector. So let's put our hands together for Banker of the Year Award for the year 2022-23. Let's have a look at a short and exclusive film on the journey of our winner.
The winner is V. Vaidyanathan, Managing Director and CEO, IDFC First Bank. The year 2022-23 was a standout year for IDFC First Bank. In a significant endorsement of the lender's robust health, 3 credit agencies, CRISIL, ICRA and India Ratings, upgraded its long-term credit rating to AA+. Coming out of the pandemic, the bank was able to grow its deposits by nearly 40%. Our share of CASA deposits rose to nearly 50%, while the share of retail deposits rose to 76%. The bank launched a host of new products, scaled up retail and commercial portfolio, and grew the loan book by 30%. It diversified the loan book across 20 businesses. Asset quality improved with the net non-performing assets at just 0.9%. IDFC First Bank posted its highest ever profit after tax at 2,437 crore rupees and ended the year with a strong capital adequacy of 16.82%. Reflecting this, the bank's market capitalization more than doubled during the year. For this excellent performance at a relatively tough time, the jury selected V. Vaidyanathan, Banker of the Year.
Yes, ladies and gentlemen, there you have it. Mr. V. Vaidyanathan, Managing Director and CEO, IDFC First Bank, here on stage receiving the award. Let me tell you that that illustration is made by Shyam Kumar Prasad, the Chief Illustrator, Financial Express. Once again, congratulations to Mr. Vaidyanathan. Let me request you to please share a few words this evening.
Good evening, ladies and gentlemen. First of all, thank you very much, Financial Express, and a very, very stellar jury for nominating for this huge honor for our bank. Basically, all our members of the board, our employees, all of them will be really very thrilled with this. And it's a huge encouragement boost for us, so thank you very much for that. 5 years ago, at the time of merger between Capital First and IDFC Bank, both were basically lending institutions, and IDFC had just got a bank license, so the CASA percentage was only 8.7%. So and all of us as bankers, we all know that 8.7% CASA is a really very low number, and retail deposits of only 10% and balance 90% was institutional money. In just 5 years, our CASA has now touched 47%, and our retail deposits are now become a very big portion of our deposits. So bank is in a very strong shape, and last year we made a profit of like 2,900 crores in 24, and we are making a loss in 2018. So really, this is a big change for our bank, and we are very encouraged. But I just want to say that personally, at least I have been a very big beneficiary of goodwill in the system all the time, because without goodwill, none of these things happen. I actually left ICICI Bank somewhere in 2010, and at that time I had bought significant stakes in a small non-bank finance company, and the retail book was only 100 crores. And the only theme I had at that point of time was that we'll finance really small entrepreneurs, there's hawkers, kirana shops, salons, etc., and we'll build a business out of that. And in the last maybe since that, then after that, I went once to meet Mr. Deepak Parekh, and at that time, the company was 100 crores. Deepak Parekh doesn't need to meet me. I'm some small guy somewhere, I already left ICICI. But he met me, and to the extent that he actually told Warburg Pincus that if you want to back 1% in the country, back this guy. Now, who does this thing for anybody? And how I can forget that? Then later I went and met Mr. Kamath. Again, I was a nobody, left ICICI Bank, already gone, small company, small non-finance company. He met me, he spent time with me, and he was, as all of you know, very courteous. Then I was looking for many private equity players to back the company at that point of time, because the idea was that we'll fund, but I need first generation entrepreneurs need equity. So at that time, Warburg Pincus backed us. We were really in a hellhole at that point of time. My QIP failed. Banks were not lending. It was very difficult. So Warburg Pincus backed us with a really 800 crore check. I'll never forget that. Then banks, from that, at that time, 2010 to 14, I can tell you, many of you may have forgotten, but the Indian economic situation is very bad. Economy was, going through going down this way, inflation is going this way, interest rates were climbing, everything was horrible. And at that point of time, private equity was, banks were not giving, difficult, private equity is difficult. I must have gone to many of them. And at that time, banks in that 7-8 years lent us 80,000 crore rupees. That's the amount of money we raised from, we raised equity and borrowed from banks, and the net book was, 30,000 crores. Point is that and shareholders, then we did a merger. I was really crazy that we need a bank license, bank license, bank license. I was just very clear we had to convert to a bank. And then after this merger again, because of infrastructure, etc., in cycle was not good. Loss for 6 quarters. Somehow people used to say about our bank, when making loss 6 quarters, private sector bank, not normal. At that time, people used to say, next HDFC bank. Ye kya goodwill hai? We were very shocked and we were always very happy that bank is posting loss. If some other banks are sometimes, so banks posting loss is very bad news actually. But we were next HDFC bank. So that kind of goodwill from media, that kind of goodwill from people around, I really believe that this is a product of the goodwill that has really taken us there. Our board is a stellar board, so we really very straight, very high on corporate governance. I'm very thankful to everybody. And I really believe that there is a secret, silent power of goodwill. Even media, horrible news still say people still supportive of us. Shareholders supported us. We're posting loss, but shareholders still supported us, gave us equity for growing. So I honestly believe this is a power of goodwill. And we have now reached a stable condition. But when Shobna called me the other day and said that, God's award, you should come. I initially told her, oh my God, this is like, this is too much in the limelight. This is, really not avoidable. But then after seeing the jury, and then I thought to myself, this is a huge encouragement, a huge honor, and I actually wanted to thank, then I reflected on it and I really felt this is really good news. And I really very much thank Shobna and Finance Minister. Thank you very much. It's a huge honor to receive the award from you and from every one of you. I want to say very sincere thanks to all of you. So thanks everybody. I must tell you that on closing comment, I can't forget this. Actually, at some stage, I pledged my house and to buy that company. And, we were borrowing some 100 crores or something like that, through some means. And, pledging the stock also. And I'm telling you that even at that stage, I told you so many people who supported me, even my family supported me, even my wife supported me, even I was pledging the house to buy the company. So I must say that goodwill all around. Thank you very much, everybody, for the whole thing. Thank you.
Once again, many congratulations, Mr. Vaidyanathan. Ladies and gentlemen, it's time for the last award of the evening, the Lifetime Achievement Award, which felicitates that individual whose contributions over his career to the banking and the financial sector has led to fundamental changes and reforms. Let's take a quick look at a short exclusive film on the journey of the Yes, ladies and gentlemen, Mr. Dinesh Kumar Khara, former Chairman, State Bank of India. Can I request a standing ovation, please? A Kumar Prasad, Chief Illustrator, Financial Express. And I would like to invite Sir to please say a few words on this evening.
Thank you very much. Very good evening to ladies and gentlemen. My sincere thanks to Honorable Finance Minister. I feel really blessed and honored by her sheer presence and giving me this distinct honor. Well, when I was reached out for this particular award, I felt that it is perhaps too early for me. But nevertheless, it's a recognition. I very humbly accept that, and also my sincere thanks to the jury as well. I think the journey has been what Honorable Finance Minister described from the 2014 till now. I would say that those were the transformational years for the banking sector, and perhaps each year we have seen something good. But having put in about 40 years in the banking, I've actually seen the transformation of the banking and how it has moved from a highly inefficient to very, very efficient payment system, what Finance Minister mentioned in terms of the UPI. Perhaps there was a point of time when we joined the bank, it was perhaps a dream to get the payment transferred within a week. So with that kind of a situation, now in a couple of seconds, the amount is transferred. So actually, the banks have lived up to the customer's expectation. I'm very happy that irrespective of the ownership structures, the banks have strived to contribute to the development of the economy. And I can only assure you, Honorable Finance Minister, because what you mentioned in your address, which is very meaningful, particularly when we are talking about the digitization, and the cyber is something which is very much on the top of the mind for everybody. And it is an effort and endeavor on the part of not only the banking system, but also even those who are in the government and all the investigating agencies also. There is a huge collaboration which is happening today, and I'm quite confident that with that kind of an activity level, perhaps even cyber will not be as much of a challenge, and the investment is very much being made in terms of upgrading the skill set of the employees, which will ensure that the bankers are ready for the next generation also. So once again, my sincere thanks to Honorable Finance Minister, jury, Financial Express, and to all of you for being with me at this memorable moment. Thank you very much.
Once again, congratulations, sir. And on that note, ladies and gentlemen, we approach the conclusion of the award segment. One more time, a big round of applause for all of the award winners this evening. I would like to request our honorable chief guest to kindly remain on stage along with Mr. Shamal Majumdar, editor, Financial Express, as we would like to move into the next segment of the evening, which is an exciting and exclusive fireside chat with our chief guest. Mr. Rana, Mr. Goenka, thank you very much. Request our honorable chief guest to remain on stage, along with Mr. Shamal Majumdar. I now like to hand over to Mr. Shamal Majumdar to take the conversation ahead from here.
Well, I've been given just about 15 minutes, so we have to really rush through this. Nirmala ji, first thing is that, this Modi 3.0 government, it has completed 100 days in office last month. Now, what has the experience been? How do you compare the majority Modi government with the Modi-led coalition government? Has the pressure on you increased as an FM?
No, not at all. The pressure on us ministers to deliver, to perform, to hear all the stakeholders has been the same since 2014. Nothing has changed for us. In fact, in the first 100 days, I think the data was given out, more than 15 lakh crores have been part of the cabinet's decisions. Decisions on major schemes, all totaling to 15 lakh crores have been taken. That cannot happen without enough groundwork. So the pace continues to be the same, if anything, even faster now because you're looking at 2047 more closely than you did earlier.
No, I was talking more about the political pressure on you because of the coalition politics itself. For even innocuous decisions like lateral hiring in government jobs had to be withdrawn because some of your allies were not happy with it.
I don't think that's the way I look at it. Each time a decision is taken, you want to launch a project or you want to take a step forward, if inputs of critical value come in, we'll always take it. There wasn't any coalition when some of the earlier decisions had to be worked again so that we come up with a better, well-tailored scheme. So it's not at all the coalition compulsion. It's more meaning to deliver better.
Right.
And there's no political pressure on us.
Okay. Tomorrow is monetary policy. So I just couldn't resist myself asking this question. What is your view on this discussion around the inflation targeting framework? It should change. RBI should focus only on core inflation, leave out food and crude, which is volatile. What is your view?
No, I think there's a lot of debate which is required on this. And I wouldn't yet take any position about whether food should be in there, food should not be in there. But certainly the CPI basket and the WPI basket don't seem to have much of a commonness because the WPI basket probably has certain items which probably will have to be in CPI, and the CPI also has some items in the basket which probably don't have a contemporary value as it was once. So thoroughly looking at the components in the basket, which after all is finally the instrument through which you are assessing the impact of inflation, will have to be period relevant.
Nirmala, this share of manufacturing, you must have heard this question several times, has stagnated at 15% for a very, very long time. I remember during our interview with you, just during the elections, you said that India needs to do something in order to give a boost to its manufacturing, and you would welcome a dialogue with industry. What actually they want. What has been the progress, and how do you think this can be improved further?
The dialogue continues with the industry, and I still welcome any industry leaders who are here to engage with the government to see what best has to be done to make their participation even more significant. I think in the environment of China Plus One, when PLI was brought in, there was a lot of question about whether it will be effective. The sectors were identified. The sunrise sectors were given the priority. And with that given priority, PLI was rolled out. Today you find that except for one or two sectors, in most sectors where PLI has come in, has actually brought in a quality of difference to manufacturing itself. The numbers are always reeled out about the mobile phone manufacturing. But that's the case because you tend to see how much is getting exported, and therefore you think that has happened only for the mobile phones. But I find the interest in renewable energy, in the semiconductors, in the chip manufacturing itself, and also the other aspects of semiconductors are all rapidly changing, and for the better. So also the other elements of the green energy, whether it is hydrogen, whether looking at the advanced chemistry which is so required for battery and battery related issues, there's just a lot of change and approach which the industry is willing to show. And together with it, in the last two budgets, where we have given R&D a push by creating the Anusandhan Kosh and also prior to the Anusandhan Kosh, giving 10,000 crores towards research and development has actually brought the industry to believe the government is really looking at it wholesomely. And it's not just incentivizing that additional marginal production which will happen, but also is investing to bring private sector on to R&D together with government or aside from it as well. So the Anusandhan Kosh is also a long-term incentivizing on R&D so that newer industries will benefit from research.
Congrats on BJP's spectacular victory in Haryana today. The question is that you see this race to competitive populism. Congress during Lok Sabha elections used to say khatakhat paisa. But even if you see some BJP-run states, for example, in Haryana itself, the BJP manifesto talks about 2,100 rupees for women and 2 lakh government jobs. The state where we are in now, Maharashtra, has also given this Ladli Bahin scheme. One of your cabinet colleagues has also talked about how this will reduce the money available for industry. Several Congress-led government states have also done. Where will this end? How will states continue to do this? Is it sustainable at all?
What is sustainable is different from the freebie debate that we are talking about. Sometimes those which can be supported by budget are also seen as freebie because in general we tend to think anything given to the poor people will have to be a freebie because they don't deserve to get it. I think there's got to be, looking back at India's history, money was spent in what was not freebie and people thought that's good, it has to happen because it's budgeted, it goes through a certain process and the money reaches those who deserve it. But the money never reached. At that time we didn't think that was, oh, what a waste of money. We thought, no, it has to go, you have to give houses, you have to give drinking water, you also have to give some promotion for their businesses and everything else. But today, the very same arguments are being turned around to say, no, freebies. I'm not in favor, let me put this very clear, I'm not in favor of freebies which cannot be sustained in your normal welfare kitty. Normal welfare kitty being, you have to support the poor, you have to handhold them for their education, you have to make sure their health is improved, they are not going to spend out of their pocket for taking care of their health, and so on. So you probably know I'm categorizing things based on a state's fiscal capacity to take on. But I also don't need to name states because it's very obvious where promises were given which they couldn't sustain. And also along with this, the committed expenditure of some states itself reaching more than 50%, 60%, some states 80% of their budget goes for committed expenditure. These are ways in which you have to have a holistic look at the states and their finances and have a long-term, at least a medium-term plan to make sure that the finances of the state will come in such a way that you're able to spend for the development aspirations, equally taking care of the welfare. But if you just be a freeloading state with committed expenditure being high and also newer sources of revenue not being identified, if a state is very good at tourism, they just depend on tourism without looking at other sources which can, strengthen their revenue generation. But we give a larger kitty for, welfareism is not going to help. So there has to be a lot more, not these, I'm missing out on the word, we don't need to have a discussion just at the layer of, oh, is this a freebie, is this not, is this worth it, is this not? We should have a debate of what constitutes the freebie. Is it truly the kind of, today it's come to be a very much criticized word. We don't want freebies, but you cannot in that name deny the poor the help that they need to get for some more time until they come out of the pathetic state of poverty in which nobody wants to be in poverty. But if you are able to extend some kind of help, it should be in alignment with the your budgetary and also your fiscal situation. To be away from it And to justify it in the name of welfare will not hold good. And to be away from it and still insist on giving it will tempt all of us to say it is a freebie. That contemptuous language with which we say that's a freebie, as different from the welfare measures. Even if they were inefficient, we were ready to accept it. We need to make them more efficient. We need to make them more transparent. We need to avoid pilferages in them. So all of us will have to apply our mind to see that we are not gathering ourselves only to talk about the notorious freebies. We don't want them. But yet, if a system improves, if there's more efficiency in the system, you may not want those tempting freebies either.
The India story, if you see since 1991 and then 2014, of course, has been a story of great prosperity for a certain section of the population. But somehow, successive governments have been unable to craft a strategy to bring the next 150 million people out of and give them that same prosperity. So this has led to this great inequality debate all over the world, including in India. What is your take on that? How do we, ultimately there is an inequality in consumption, in everything. So this is a problem that I'm sure as a finance minister you are also grappling with.
Consumption, I would think, is getting better both in rural and urban areas because of the various targeted schemes with which we have addressed the issue. Not to say that that's the end of the story. We need to have more support as and when we can extend them. But consumption can be supported not just through revenue expenditure. Consumption can be better served through capital. And that is why, as a conscious call, government has taken a view that our expenditure, which will be through the capital route, is the way in which we can boost consumption and also remain clear that our expenditure will create assets. The multiplier resulting out of that is far more than the multiplier that you will have for the ways in which you boost consumption through directly putting money in the pockets of people. So that is one of the ways in which we are trying to target and bridge inequality. Also, access to education, access to skilling will make people rise from where they are. So there are one or two more such approaches that we take to make sure that the gap can be bridged.
You have repeatedly talked about that banks should stick to core banking. Do you mean that banks should stick to retail lending only and not get into project lending?
No, I'm saying it for two reasons. One, banks should be the first source of mobilizing deposits. Now, your best banker did speak about it, didn't he? The way in which his bank has got transformed is on the back of core businesses doing very well. We need to have that because bank, I repeat, will have to gather deposits and lend. I'm not saying their core businesses should get confined only to that. They can, of course, support projects in a very conscious way, medium term and not very long term, but looking at how they manage their deposit and lending. It cannot lead to once more that horrible situation that Indian banks were in, where there was asset liability mismatch. We cannot have that situation again. And it is because of that asset liability mismatch situation, banks took longer to get back to being healthier. It all happened simultaneously. Asset liability mismatch, you are starting lending long term, borrowing short term, and therefore you're not able to keep that cycle going. So you got into that situation, and together with it, to aggravate it, was also this phone banking where, cronies were being given loans which you couldn't retrieve at all. So banks will have to be conscious of what they do and how they do it, and essentially those which are very much in the bank board's hands are this avoiding of asset liability mismatches. And that is why it is not for them to go for high risk long term funding, which is the business of the NABFID, the National Bank for financing infrastructure and development. It is their business for long-term funding, high-risk funding, not the scheduled commercial banks.
These corporate profits have been growing at a very decent pace, but if you see the net fixed assets that have declined, when do you think, what do private companies tell you? Why are they not investing?
I thought the media will inform me on that and tell me that, look, that is where they are, why won't you want to take some action on them? I'd like to hear from you all.
No, I want your views on.
I'm as informed as you are.
Okay. Now, I think I think the last question I'll ask, because you have to leave. You know, regulators should be like Caesar's wife, above suspicion. Given the context, what has happened in SEBI, how do you see it? Because do you think there's some monitoring mechanism required for regulators in India, or the regulatory governance structure is fine?
I think there is a lot to be looked into in terms of the facts which are coming out on this matter. There's just no way in which all of us sitting around here can say that, no, there's Caesar's wife business and therefore regulators will have to be above board, and keep throwing things without looking at the facts which are before us. I strongly recommend that facts are taken on board before we discuss anything to do with the regulators. Strictly speaking, and I don't want this to be a correlation to the question that you're asking, I'm consciously saying it's not just in correlation with the question you're asking. Indian regulators and the way in which they are functioning have actually brought greater transparency to the system. And Indian regulators are being now looked up by even their peers outside for the way in which rapidly the Indian markets, the Indian banks, the Indian insurance sector, and also the way in which we keep our books are all being regulated by our regulators, and they're doing a world-class job. So we should be extremely cautious, and I'm not against any kind of questioning, I'm not against any kind of review or critiquing, but we have to be extremely conscious that we look at our regulators for what they've done as well.
Nirmala ji, thank you very much for, as usual, you are as candid as ever. Ladies and gentlemen, a big hand for her, please.
A big thank you. What an insightful conversation that was.
Just one political question. Just quick 2 words. Your lesson after the election victory today. One lesson for BJP and lesson for Maharashtra.
Lesson for BJP is keep working as you've always done. Don't believe in false campaigns. People are with us. You just have to be clear that you have to reach out to them and talk to them about the good work Prime Minister Modi is doing. Lesson, I don't want to say lesson for Maharashtra, but Maharashtra BJP is now going to repeat what Haryana BJP has done.
Once again, a big thank you to our honorable chief guest. Request you, ma'am, to please remain on stage for just a moment longer. I'd like to thank Mr. Shamal Majumdar and invite Mr. Anant Goenka to come back onto the stage, because the Indian Express Group would like to take this opportunity to present a very special token to our honorable chief guest. Let me tell you that this portrait is made by E.P. Unni, the chief cartoonist at the Indian Express. Request our honorable chief guest and Mr. Goenka to please take your seats as we proceed for the vote of thanks. And I'd like to invite Dr. Satinder Singh Rana, CEO Corporate IRB Infrastructure Developers Limited, to please come on stage to deliver the same.
It's too early. Good evening to all of you. Sorry. Sorry for the delay. Good evening to all of you. Honorable Union Finance Minister, Madam Nirmala Sitharaman ji, dignitaries and the participant and the award winners. We are extremely grateful to the Honorable Union Finance Minister for taking time off her hectic schedule to be with us today and sharing her vision about the future of the financial market. It is a matter of great honor and privilege for IRB Group to host the wonderful event in association with the Indian Express Group. IRB is India's first fully integrated road infrastructure company, managing a road portfolio of 15,444 lane kilometers across 12 Indian states. IRB has an illustrious track record of constructing world-class road infrastructure, connecting economy, people and culture across India. With its two strategic partners, JSC and Cintra, IRB is India's first multinational road infrastructure company. Having two InvITs, IRB is uniquely poised to undertake any big-size road project in India. IRB today has established itself as a market leader in BOT and TOT verticals of its business, and has a market share of nearly 38% and collects 10% of India's total toll revenue. With its modest beginning in 1998, IRB today holds an asset portfolio of nearly 800 billions. In this remarkable growth journey, the banks have played a very crucial role in our growth and always stood as a pillar of strength to us. Once again, we take this opportunity to express our heartfelt gratitude to Honorable Union Finance Minister for gracing the occasions. We are grateful to all dignitaries and participants for their active participation and making this event a grand success. Have a wonderful evening and thank you very much.
Thank you very much for that. And one more time, I'd like to request our chief guest, Mr. Anant Goenka and Mr. Shamal Majumdar, to please come on stage for the group photograph. I would also like to quickly request all of our winners, jury members and our partners to please join us on stage for the photograph. Once again, hearty congratulations to all of our winners this evening. Once again, many congratulations to every single winner of FE India's Best Banks Awards. We'd like to once again thank our chief guest, Honorable Union Minister of Finance and Corporate Affairs, Srimati Nirmala Sitharaman. And of course, we'd like to express our deepest gratitude and thanks to all of the dignitaries present today for making this evening a success. We'd like to thank our partners, ladies and gentlemen. Presenting partner, IRB Infrastructure Developers Limited. Our corporate partner, World Trade Center. Our AI partner, Hexo AI. Associate partners, Runwal Realty, Starkey India, India Infrastructure Finance Company Limited, Nyati Group, Joy E-Bike, Finstack, Aditya Birla Capital and Navneet Motors, and our knowledge partner, Ernst & Young Global Limited. Ladies and gentlemen, you all have been an absolutely wonderful audience. Please do join us for cocktails and dinner. Thank you very much and have a lovely evening ahead.